Supply data out this week provide a useful reminder about behavior of the Organization of Petroleum Exporting Countries. The quota set by the group at its meetings, the next of which will be June 5th, is secondarily important. Indeed, when OPEC announced last November that it would not lower the target, 30 million barrels a day then and now, to accommodate reduced needs for its crude, the weakening crude market collapsed. Always more important than the quota is actual OPEC production. The average in April, according to the International Energy Agency's May oil market report, was 31.21 million barrels per day. An increase of 160,000 barrels a day from March output showed the prior month's high level wasn't a fluke. The March increase, according to IEA's May report, was 960,000 barrels a day. Iraqi output continues to increase. Libyan production in April also was up. The most important increase came in Iran, April production from which, at nearly 29 million barrels a day, reached its highest level since 2012. Some of that might have come from floating storage. Saudi production, meanwhile, although down slightly from an elevated March level, remained high in April at 10.1 million barrels a day. Countering the increase from OPEC members was a 260,000 barrel a day drop in output elsewhere. IEA kept its projection for 2015 demand at 93.6 million barrels a day. On balance, output of OPEC crude remains 1.2 million barrels a day above a group quota that's 800,000 barrels a day, what IEA estimates the world needs from group members. Preliminary data indicate inventories in the industrial world continued to rise in April after a counter-seasonal increase in March. Under these conditions, the price of crude oil cannot rise much. The benign interpretation of elevated OPEC production is that Iran and Saudi Arabia are jockeying for market share, but their fraying relations relate to more than competition in the oil market. If that conflict stays on its present course, OPEC's quota, amid everything else straining the market, will matter less than usual. I'm Bob Tippie, editor of Oil and Gas Journal, and that's the editor's perspective that appeared first in text at www.ogj.com on May 15, 2015.